Good afternoon, everyone. I welcome all the analysts and fund managers to our virtual meeting of BASF India Limited today. I also welcome our Mr. Customer Managing Director and Mr. MJ Baliga, our CFO, to this virtual meeting. The participants are requested to kindly note that this meeting is being recorded for our internal purpose. Further, I would like to brief about certain important points for smooth conduct of this meeting. All of you are aware by default, you are all placed on mute by the host to avoid any disturbances arising from the background noise. During the question answer section, the names of those who have already registered with us for asking questions will be called, and thereafter speaker will be unmuted by the host so that you can ask your questions or raise queries. Others who wish to ask questions may raise your hand by clicking on raise hand icon on the right hand bottom of the WebEx page. In view of the good response received for our meet, I request all speakers to be in brief while asking questions or raising queries. With this, I now request Mr. Krishnamohan and Mr. MJ Baliga to present on company's performance and other related topics. Thank you.
Thank you, Pradeep. I hope I'm audible.
Yes, Mohan.
Thank you. So a warm welcome to our analysts and fund managers meet that we are holding today. So myself and Naren will run you through a few slides which talks about our performance in the first 3 quarters of this financial year. And we are happy to take your questions after that. But before we start, a few customary remarks regarding about forward-looking statements. So only the matters which are in public domain can be the subject matter of this discussion. And as a matter of policy, we do not provide any forecast about the future business situation. We do not comment or give guidance on future results or business outlook. So just bear with us. So we are discussing about our performance for the first 9 months of the financial year, and happy to talk about any questions that you have. So to start with, I would like to address that, when we started the year, the first quarter, April to June, was a difficult one. And I did speak to you sometime late August at the last meeting in the same virtual format. Unfortunately for us, I would have liked to do this in person, but with COVID still around us and all the restrictions that we have, and rightfully so, because COVID is not over, that we have to take all necessary precautions and we meet in a virtual way. But I'm sure most of you are used to this by now, just like we have become used to the fact that we are operating in a COVID-dominated environment, and we have to take all necessary precautions. And I thought this slide was apt to show that your company has been taking all the necessary precautions, keeping safety in mind, to ensure that all our operations function as they should, despite the challenges that we have. And I must say, it's been a challenging year, the first 9 months. It's not been easy. Initially, most of our plants were shut down because the government did order us to shut down, except for non-essential. Only the essential services were allowed, and everything else had to be shut down. Towards the end of the quarter, around June, when the plants were allowed to operate, we slowly restarted our operations. And I'm proud to say that all the safety measures that we took made sure that the restart of our plants were perfect, and we did not have any incidents at any of our plants. You can see we take all the necessary precautions at our sites, at our offices, to ensure that all our employees are safe. That said, we had roughly around 300 cases of COVID even within the BASF community over the last 8 to 9 months. Most of the cases were light cases or not so severe, and people were under home quarantine and they came back to work after the necessary protocols were followed. And I'm also happy to say that there were no cases of transmission at any of our sites or offices during the course of the last 9 months. And that's really a good record for us. And it proves to us that the commitment to safety that we have, not just in our plant processes, but also in the way we operate in terms of our offices, in terms of our sites, worked very well. And when I was analyzing the numbers in correlation to our activities versus what's happening in the country as such, one could find a kind of correlation in terms of where you have pockets of higher infection rates and where there are less infection rates. So it was more or less according to the demographics of the country and the situation in the country. So proud to say that all the measures that we took on site and in our offices worked pretty well. That said, in the last quarters, as the demand and the industry demand came up, the load on our production sites, the load on our offices also increased, and we were able to manage the activities in a very safe manner. All our plants are running normally as pre-COVID times, but with additional precautions. Most of our office colleagues are working from home even today, like many of you also must be working from home. We only come to the office when absolutely required, following government regulations and all the necessary protocols that are required. So even today in this room, you see there are hardly any people, and you see Rajesh Naik, my fellow board member, and myself who are in the meeting room here. We have our masks on. I would have liked to remove the mask, but it's not allowed here, so I cannot show you my face. But yeah, Naren, who's working from home, you can see him, as well as Pradeep, you can see him quite clearly because they are working from home. They don't need a mask. So that's the way we are. And I think safety is of utmost importance. And last year, we had one of our best safety records in a long, long time. We had no fatalities or no incidents at our plants. And that was really a wonderful performance. Everything in the green, that we outperformed the previous year, which was even better. That said, what was the kind of environment in which we were working? I mean, you are all fully aware how the economy went about. I mean, we had a difficult time with the GDP contracting significantly in the April-June quarter, significantly, almost to the extent of 24% negative. It recovered a little bit with the gradual reopening of the economy to about -7.5%, 8% in the second quarter. And finally, in the last quarter, you saw it to be slightly positive. So demand recovery happened. Now, thanks to the government measures of reopening the economy and the demand recovery that we saw, it also had a positive impact on the demand on our products, as chemical industry obviously very much active in every sphere of the industry. So positive demand recovery, and also now I see that the government is pretty active, and the budget that was recently announced is also a growth-oriented budget. So this all makes me feel that we are in a positive environment as of today. With the vaccination that is happening in the country also provides a positive background in the context that already 15 million people are vaccinated. Obviously, it takes a long time with a country of our size for everyone to get vaccinated, or a large percentage of the population to get vaccinated. But I'm confident that in due course, we will have an environment where the economy will do well, and that will have a positive impact on the overall industry. Some positive signs can also be seen in this quarter. So if you look at the GST collections in January, or the shipment and production of cars which happened in January, these are all numbers from public domain. They are record numbers. Also, the fast-moving consumer goods, they recorded a 2 times growth versus previous year of 2019. Last but not the least, the ag sector. Now, the ag sector, which we have reasonable exposure to, had a 3.4% growth in the previous year. And it's an industry where we have significant exposure, not just with our ag business, but also with the chemicals business. And in my view, the overall economy, and I said that a couple of times also during our AGM, that my expectation was that with the good monsoon that we had, with the good water levels, there would be demand recovery from the tier 2, tier 3 cities, And that's exactly what we saw in the course of the last 6 months, that the demand recovery, when it happened from the small towns and it increased and we saw a positive impact. Even right now, what we see is the water levels in the reservoirs end of last year is quite good. And the winter crops also showed a positive trend. And the monsoon forecast, also from what I hear, is supposed to be close to a normal monsoon. So the outlook from a weather pattern also is positive for this sector. Just to go back and reflect a little bit, when I spoke to you the last time, um, we were at the we were after the first quarter of the financial year, somewhere around August, we spoke to you, and I talked about an uncertain external environment where we had the COVID-19. We weren't too sure how things are going to develop. There were a lot of geopolitical tensions which were impacting business, and also our currency was weakening in relationship to both the dollar and the euro. So that was kind of an uncertain environment that we were in. And these are exactly the same bullets which I showed you the last time around. We had several issues with regards to demand. Demand was sluggish, whether it was auto, whether it was construction, consumer, and also the business environment in terms of trade policies, imports were a bit of a challenge. On top of it, we had the normal business challenges in terms of credit management, supply chains. We had a lot of delays in shipment. We had high costs of importing goods and transporting goods. And last but not the least, with the labor crisis that we had, migrant labor crisis, we also had issues of labor availability. This was Q1. But I must say that with all the measures taken by both the company as well as the government, a lot of things have improved in Q2 and Q3. And you saw that in our results as well. From a business management perspective, our focus on top line growth. Our top line growth in this environment, we were operating when the demand was a bit sluggish. So what did we do? We engaged digitally with most of our customers, because it was not possible for us to actually go and visit customers and continue with our projects. But we found ways and means to make sure that our projects could be done in a virtual way. A lot of technology has been used, digital measures, whether it's been virtual reality kind of topics or just meetings like these. We've used all kinds of tools that were possible to ensure that we complete those projects and make sure that we meet the demands of our customers. We also focused on supply chains to make sure that there were a lot of delays in those days, and how can we make sure that we have adequate trucks to meet the demands of the customers, how to expedite clearances at ports. There were huge backlogs back in Q1 and Q2, and we managed to do that with a combination of service as well as customer engagement. The second aspect that we focused on in these difficult times was margin management, which I think, of course, is of interest to all of us, because just growing top line is not enough. We need to work on our margins as well. And you would have observed that working on our pricing, working on our raw material purchases, we managed to improve our margins in the last couple of quarters. And last but not the least, it was about cost control, making sure that our fixed costs are kept under control, and the resources that we have, whether it's our office space, whether it's our finances, whether it's our bank credits, we make sure that all these are used in an optimal way. At one point in time, we had very high overdues because the customers could not pay us. The cash flow was all stuck up. At that time, we did borrow a fair amount of money from the markets, but we managed to keep the business ongoing. And as soon as things improved, we brought it back under control. And I'm sure Naren will talk about it, about what we did in the context of working capital during the course of the last couple of quarters. Last but not the least, the stakeholders that we had, whether it was customers, whether it was our employees, or whether it was the general government and industry around us, we had to work quite heavily, especially with regards to the challenges that we were facing in the context of our import business or raw material imports, in terms of policies, in terms of making sure that our customer and labor is able to function properly. Employees, I can only be thankful to the employees of our company who for the last 9 months have faced several adversities and challenges to make sure that our operations run perfectly well, as if there is no COVID around. Yeah, so they have been working day in, day out. Many people operating out of homes and really doing a fantastic job to make sure that we meet the needs of our customer. And I talked about customer engagement. I mean, just think about it. We have this ag business which is all over the country, and the people have been braving it out, going to all the mandis, to the farms, helping our customers with their problems, with their challenges. We also had customers, whether it's the automotive industry, where we had to do a lot of things virtually, attend seminars, give technical support. So all these things really added to the strong bounce back of our company in the last couple of quarters. And the result is what you see. And when you look at the left-hand side, quarter on quarter, we've been growing our business. What you see in blue is of the comparative numbers in the previous financial year. Green are the numbers from the current financial year. You can see that every quarter we have outperformed double digits with 11, 19, and 24% growth over the previous corresponding quarter. And also, if you look at quarter on quarter, we've been growing our business. So it's really been a fantastic performance by the company and the team here. On the right-hand side, you see the profit before taxes, before exceptional items. And here you see that we've not only outperformed the previous year, but also from a perspective of increasing business and profitability, from being negative for 41 crores in April-June quarter. We generated 111 crores profit in July-September and almost 200 crores in the October-December quarter. So I think the work that we did in the context of growing our top line, improving our margins, and controlling our fixed costs is all shown here in the context of our EBIT before or PBT before exceptional items. So to sum it up, BASF is a resilient company in the context of our diverse portfolio. But to top it all, just the portfolio doesn't help. We had to enhance our engagement across our stakeholder community. We did a lot of things to improve our processes, because the way that things worked in the past prior to COVID did not work during the COVID time. So we were also innovative in the context of how we work. And all this helped us to perform stronger and deliver even better results. Just a couple of examples, what you see over here on the right-hand side is what we did with our ag business. In the ag business, we have digital channels across, and all our customers are connected. Yes, our people could visit the farms because they were part of the essential businesses, but we had over 2 lakh farmers who participated in live digital meetings and field days. And these are things which weren't possible in the past. But we've done a lot of work in the context of farmer meetings, in the context of our supply chain management, which has also become digital to a large extent, our billing processes. And this transformation into the digital world also helped us run the business during the COVID times in a successful way. On the left-hand side, you can see that we successfully rolled out a Net Promoter Score and Salesforce being rolled out today. This helps us to hear the feedback from our customers as to what are we doing right and what are we doing not so right in the context of our products, in the context of our services, our supply chains, and our processes. And listening to our customers, we have been improving our digitalization in terms of automation of processes, whether it is robotic processes or business process automation. We've invested into that, and this has helped us survive in a very difficult time when it was not possible to come to the office and gather around in a meeting room and talk to everybody. It really helped us. Just a couple of examples of what we did. And practically, I think this is what the readiness to transform into a digital business is what helped us to continue our business as in a very positive way and grow businesses in a difficult time. It's not that the overall economy did 20% better than previous year, But you can see that our top line did grow fantastically well, and this was a combination of some market share gain on top of some organic growth. So when you look at our segments, in the past, we used to have a very balanced portfolio, and I remember Naren talking about it the last time as to how all our segments look more or less balanced. But as a consequence of our portfolio management activities, and I think Naren will talk about it a little bit later as to what we did in the last year on our portfolio management, you can see that the surface technologies business has shrunk quite a bit because of the sale of our construction chemicals business. On the other hand, the materials segment has grown because we did acquire the Solvay business in terms of polyamides, and here you will see also as the quarters go on, you will see the impact of that. Naren will talk about that in a minute. But if you look at it, all the other segments, whether it is ag, chemicals, nutrition, and materials, industrial solutions, they're quite balanced in that portfolio. So what I talked about earlier, that our resilient portfolio, the balance in our portfolio, enables us to have a strong performance even at a time when the overall industry may not be that good in one or the other areas. Last but not the least, before I hand over to Naren for the next slides, I must say that part of our business did also have a little bit of tailwind coming from the fact that the ag business, the nutrition business, and the care businesses had a positive impact under the COVID environment. There was a positive development across the industry, and we did outperform there as well. But it is clearly a fact that these three industries had a positive impact. The automotive industry, which is largely in the material segment and also in the industrial solutions and surface technologies, here I must say the previous year was a challenging year, but the performance of BASF in that segment has been remarkably better than our industry peers. Naren, I think over to you.
Thanks, Mo. Can you hear me?
Yes.
Yeah, good.
Yes, Naren.
So thanks for the overview, Mohan, and good afternoon, everyone. I wish we were able to meet in person and I can present to you face to face instead of me talking to my screen and you are looking at a stamp size photo of mine. But this is the best thing we can do, and let's see how best we can utilize this time. So now Mohan gave an overview of the business and describe what are the challenges we face in achieving the numbers. So let's drill down a little deeper into the numbers and see how we have performed. And this is for 9 months. And at the top, you see the title consolidated because it is consolidating BASF India Limited and its subsidiary BASF Performance Polyamides India Private Limited. So together, this is the situation. And I'll drill it down further in the next slide. The revenue has grown by 18%. Mohan showed the quarterly performance, and the total of that is what you see here, 18% growth in the revenue. And if we exclude construction chemicals and other divestment kind of activity and see on a like-to-like basis, if you compare, it's around 25% plus increase in revenue. So this again, I'll show in the later discussion. What was the quantum of this one we had for construction chemicals. Now, coming to a bit before exceptional item. Yeah, this is important. It is always before exceptional item we are showing. We are not confusing you with the exceptional items of sale or other expenses that we have booked. The sale of business or other expenses. Yeah, this is before any of that, which means it's an operational EBIT. 4 times increase in the EBIT. Give me a minute. There is some construction activity. Can you hear me now?
Yes, Naren.
Yeah, good. So
4 times increase in the EBIT, you can see here. And when it comes to profit before tax and before exceptional item, the increase is significant. The difference between the EBIT before exceptional item and PBT before exceptional item is the interest element. Yeah, and last year it was around 67 crores, and this year it is around 27 crores, and that's the thing what Mohan talked about. At one point of time, we borrowed a lot and ensured the operations are happening unhindered, and we ensured also all the payments to our stakeholders, whether it's employee, whether it's supplier, or service provider, whoever it is, government. All the dues were paid on time. Not one payment was delayed during that time. We had to borrow, but we borrowed and then ensured the stakeholders get the money on the due date. So, and when the situation turned and when we had a better result and the cash flow also I'll explain later, we used that money to repay the borrowing and ensure the interest rate goes down, interest amount goes down. So from 67 crores, we went down to 27 crores for this latest 9 months, which means a 40 crore reduction in the interest during the pandemic situation. So that I think is a good performance by the company. Next. Portfolio optimization, if you are following BASF for a long time now, you know this is an ongoing topic. Yep. Every year it comes in and the analysts have the same question. The fund managers have the same question, what you're buying, what you're selling, and what is the reason. Generally, these are a outcome of a global project. And in this case, again, these two are global projects, and we incorporated that in India as well. The first topic here is the divestiture of the construction chemical business, which we sold to master builders. Yeah, the total consideration we received for selling this business was around 600 crores, 595 crores, and the net gain, the profit on this divestiture is 465 crores because we had all inventory and other things, receivables and other things that is handed over. So net of that, the total profit, the total net gain out of the divestment is 465 crores. And only for 3 months it was with us during this 9 months, April 2020 to July 2020, or rather June 2020, and July 1st it was business was transferred. You have to keep this in mind. The revenue for the full year last year was around 470 crores, yeah, 473 crores, and same thing for these 3 months was only 50 crores. So you see a 420 crore reduction in the total sales we captured from construction chemical business for these 9 months compared to the previous 9 months, previous 12 months. Yeah, the previous was 12 months. As compared to that, the 3 months is 50 crores. Coming to the second point, acquisition of the BASF Performance Polyamides India Private Limited from Solvay. Yeah. It has a complementary product portfolio for us, has wider distribution reach, and also gives us an opportunity to co-create better than what we were doing. So there are a couple of good advantages we have on this acquisition. It's again a global acquisition, but it fits perfectly in the Indian context, and it's part of our materials segment. We purchased this at around 300 crores, and the company had some good cash reserves, 84 crores, and net of that, you have 219 crores of enterprise value. Yes, 303 minus 84, if you see, that's the enterprise value, to around 200 crores. I round off the amount just for the sake of convenience, but the exact amounts are there on the slide. It's a wholly owned subsidiary effective August 2020, and the good part is February 1st, 2021, which is after the 9 months period in the current quarter, it has become, it has merged with the BASF India Limited. So for the March quarter, we will have a consolidated one P&L and balance sheet, unlike earlier 2 quarters where you saw BASF India Limited as well as BPIPL, which is a 100% subsidiary shown separately. The revenue last year, full year, was 276 crores as compared to now 9 months, it is 163 crores. And I'll again drill it down in the next session. Next slide. Starting from what I showed earlier, yeah, on the leftmost side, you see the 5,700 crores of total sales for December 2019. That's the 9-month sale of last year. And on the rightmost side, you see 6,753. That is the current 9 months sales. And in between, what you see is the waterfall chart, which shows how this development happened. And you have to keep in mind, this is incremental increase or decrease, and it's not the total sales. The total sales is shown at the bottom, revenue December 2020 absolute. Yeah, that is the total sale for that 9 months. But what you see here in between is the incremental increase. Mohan already explained about the current year monsoon, yeah, kind of going to be normal. And last year also, we had normal monsoon, and that helped agribusiness sell well. Corn and cotton, if I remember, are two products which had good volumes, and there was a general volume growth in agricultural business. So that has definitely helped agricultural business. And 200 crores is what you see is the incremental sales again from the last 9 months. Yeah, it's over and above what we earned earlier. And the star performer this year for us is the nutrition and care business. We have two businesses here, nutrition and health and care chemicals. Yeah, the nutrition and health we merchandise, and care chemicals we merchandise as well as manufacture in Dahej. So we have both merchandise business and OMP in this case, and at the same time it is essential commodities. So you can see around 700 crores higher sales as compared to last year. So that's a fantastic growth in the nutrition and care block segment. Coming to chemicals, this is the only segment of the segments where we don't have any production or toll manufacturing. It is purely merchandise business. And here the intermediate business did well with pharma and agro industry of taking a lot of material from the intermediate section. And this is for the chemicals. And again, there's a good growth, 500 plus crores over and above what we did last year. Materials, sales-wise, it's not a significant increase. There's a rebound in transportation and appliances industry, and that has helped the material business. We have two businesses here, monomers and performance materials, and business has done well. But in the next slide, you see that when it comes to result, it overcompensates this small increase. Yeah, that has been a fantastic increase there. Industrial solutions, dispersions, and performance chemicals. I mean, surprisingly, no increase, no decrease, exactly staying at zero. No, which means over the last 9 months, it exactly fits into these 9 months. Despite the top line falling, in the next slide I show how they performed on the results. But here it's only the top line, and like Mohan rightly said, it's not just the top line. We focus on the bottom line also. So even if top line is zero, you can see a good top line growth is zero. We see how the bottom line has grown in the next slide. Last one is the surface technologies. This has construction chemicals and coatings business mainly here, and some catalyst also. And with one business going out, the construction chemical business going out, and coatings also not doing so well with the automotive industry, this is one segment which has been showing a negative growth. So compared to the last 9 months, they have fallen 360 crores. So this is the total development waterfall chart, and at the bottom you see the revenue for December 2020 for the 9 months, how it is adds up to 6,753 crores, and the increase and decrease, a significant increase in nutrition and care and chemicals, yes, 65% and 73%. This is a fantastic performance, especially keeping in mind that the 3 months thereof was during a pandemic season, yeah, when we had very low capacity utilization, and even the transportation was not possible. Supply chain suffered, and all our imports got stuck in the ports with thousands of containers incurring demurrage at the port. From there, we recovered, and then in the next 2 quarters, the company performed in such a manner that we have been considered kind of a reliable supplier by the customers, yeah, kind of a creditable partners. So this we were able to establish during this period of 9 months. We used that opportunity to ensure our customers consider us as a good partner, yep, supplying them when not many other companies were able to supply, but we imported and supplied them during that period. Next slide. Coming to the results. Results here is defined as EBIT, yeah, EBIT before exceptional item, earnings before interest and tax. So 75 crore was what was it for 9 months, and as compared to that, it's 295 crore. That's what I talked about, 4 times increase in the EBIT. agricultural solution. Yeah, last year, if you remember, it had a 50 crore plus kind of a EBIT. Over and above that, this is 47 crores. So it's incremental. Yeah, another 47 crores. Did extremely well, better selling prices, better volumes, and all that you can wish for, and a good monsoon. What more do you want there? Coming to nutrition and care, higher volumes and better pricing strategy helped us here. 100 crores more than what we earned in the last 9 months. And that was, again, a good performance, both in terms of the top line as well as the bottom line. And it being considered as an essential commodity helped in ensuring that we don't have any major breakdown in the supply chain. We were able to supply to all the manufacturers of sanitizers and other soaps and other things without a break. And also on the nutrition side, health and nutrition side, without a break, we were able to supply and serve the society there. Coming to chemicals, again, higher absolute margins and higher volumes helped, and we had 35 crores of profit. Again, to remind you, there is no own manufactured product here. It's intermediates and petrochemicals we import and sell. Materials, this is a turnaround story. I told you in the last slide, there was not much increase in the revenue, slight increase in the revenue, but that was a fantastic performance where the higher price realization due to supply constraints in our crude MDI helped us in getting this result, 67 crores. And it was a turnaround for the business segment. It was kind of making losses earlier, and at this time, significant improvement. Industrial solutions, again, zero increase in the sales overall segment, if you see last slide. But here, incremental 25 crores with a higher selling price and a lower input cost helped the unit. Surface technology is one again, which has suffered. Impact of COVID on auto industry is to some extent. The coatings industry was hit on that, and also divestment of the construction chemicals hit us on this front. So with this, the EBIT before special item increased by 4 times to 295 crore. And I'm sure you'll have more questions during the Q&A session, which I can answer. But as of now, this is what it is on the EBIT front. Next slide, please. Yeah, this is the 100% subsidiary I was talking about, BASF Performance Polyamides India Private Limited, and 9 months performance. April, June was the time when it had a big hit. Yeah, the capacity crashed, capacity utilization crashed, especially serving the auto industry. Capacity crashed, and we had only 17 crore sale, and we have one plant in Panoli. So it makes a lot of sense for us to ensure this turns around. And it's not that we acquire a company and from the first quarter itself we have a problem. July, September already turned around, 60 crores sales, and October, December is kind of normal sales growth. 80, 90 crores is what they have to do in a quarter, and that's what they have done for that quarter. So around 160 crores total revenue for the 9 months from April to December 2020. Coming on the PBT side, profit before tax before exceptional item. April June quarter was -3, so we were wondering what is this, the first quarter we have this kind of a result for this for this financial year. But the second quarter we recovered, and in the third quarter again back to kind of a normal situation. So 9 crore is 10 crores is what they have to earn in a quarter, and that's what they have earned. Auto industry they supply, and with the rebound in the auto industry, they are having higher volumes. Next, please. Yeah. So after looking at all those numbers, I mean, there is an element of capital allocation. Yeah, what we do with our capital, especially during a pandemic situation, it will be of interest to the financial analyst and fund manager community. How is the company managing the capital? And also on the cost control front, there is some discretionary cost that goes down with travel, etc., which automatically. But then a good company also utilizes this time to optimize its cost and cut down wherever it's not required. Starting with operational cash flow, we have a very strong EBITDA. Yeah, you saw around 300 crores of EBIT before exceptional item, and then you have another 130 crores if you add back depreciation for the 9 months. You have around 400 crores plus operational cash flow coming from strong EBITDA. Yep, the EBITDA is around 400 crores plus. So that is the amount you have here. And in addition to that, I don't know whether you noticed that in the earlier slide when I talked about BPIPL, they had around 80 crores of cash. And during this 9 months, we conserved that cash and we ensured that we don't burn that down. The cash was conserved, and end of 9 months, we again have that 80 crores sitting in the books. And on 1st February, when it merged with the BASF India, that 80 crores has come to BASF India Limited now. So it's in one cash pool. So from an operational cash flow perspective, it's a very strong performance, better than any of the earlier years if you check from an EBITDA perspective, and also a subsidiary having 80 crores of cash available when it merged with BASF. Coming to working capital management, Mohan talked about how the team managed the supply chain during this critical period, and I also said how many thousand containers were sitting in the port, which we had to bring out and send to the customers. Yeah, all that was done in the second quarter in this year, and inventory is back to normal. Yeah, optimum inventory, I say, which means it's around 80 days, considering the merchandise business model we predominantly operate. It's a good situation to be. Always there is option to cut down further, but 80 days inventory when you have a 6 to 8 weeks of transit time from Europe or from the US, it's a kind of an optimum situation. Yep, and then we will optimize it even further when we get an opportunity. Coming to receivables, we had record overdues in April, and May it again increased further. None of our customers were paying, but we were paying all of our suppliers, all of our employees, service providers, facility management, everyone. Yeah, we were paying on our own, but the customers stopped paying during that time, and we borrowed and managed that gap for a couple of months. But the good thing is, in the end, as of now, I can say receivables is well under control. We generally have around 1,000 crores of receivables in the books, and 1,600 crores actually. Inventory is around 1,000 crores. The receivables is around 1,600 crores in the books, and it has been brought back to normal, and it's around 62 days of kind of DSO. Yeah, the days of receivables. So working capital management is well done, and with a strong EBITDA together, it has added 550 to 600 crores of cash flow for us. Coming to cost control measures, yeah, there were some discretionary cost adjustments that happened. People could not travel. Some of the things automatically got cut. Whereas we also used that opportunity to consolidate our offices and ensure we are together in one office and or on one floor. And wherever it's not required, we shifted from our own offices to kind of a co-working space across India, wherever we have offices. So the office consolidation happened. I won't go through the whole list. Optimizing IT infrastructure, again, that was a revelation. Earlier, we were always thinking you need a BASF infrastructure no matter where you are sitting. And that was kind of expensive to ensure we have a BASF network. But during the lockdown, we realized people are sitting at home and using their own network. So why can't BASF also come out with some innovative ideas and extend it to some of our other smaller offices, which we did during the period, and it paid back very well. Yeah, and we are working perfectly now across India with a very well optimized IT infrastructure. Coming to the borrowings, the result of all this is repayment of the loans, right? I mean, when you get all that money, always the question is how the company is utilizing that money. Commercial paper of 500 crores we paid, and we have around 140 crores of external commercial borrowings, which we will be paying in the next months. After that, we will kind of be debt-free, not on a regular basis. Sometimes during the peaks, this one we may have to borrow a little bit, but then again, we can bring it down significantly. So deleveraging was the big story for us. If you remember, since we established Dahej, we had borrowings and we always continue to be a net borrower. And now we are in a situation where we have cash to pay off all those external borrowings. And the result of that is 40 crore saving in the finance cost, in the interest and other related costs. So that's about capital allocation and the cost control, which has helped us in achieving the PBT, what you saw in the earlier slides. Now I hand over to Mohan for the next
Thanks.
discussion.
Yeah, thanks, Naren. I kind of summarize with this slide. In our view, it's been a very strong performance by the BASF team in a very difficult environment. And essentially, we've had three major items which we focused on. Firstly, it's been about our operations, and it's all been about growing in a difficult environment. When our industries don't grow, when our markets don't grow, how do we grow our business? So a big thank you to my team who have achieved this top line growth with a strong focus on margins and costs. About a year ago when we talked, I said to you very clearly that there are only three things that we need to do, and this is what we will focus on. These are exactly the three things that we talked about. We will grow our business, we'll manage our margins, and we'll control our costs. So no rocket science there. And what you see as a result of the EBIT improvement or the PBT improvement is principally sticking to those basics of business management, and then managing our working capital, like Naren explained. And digitalization, of course, helped us, our investments, and it proves to us even more that we need to continue to invest in this area to make our operations even smoother and also make sure that our reach goes even further into the industry. So that was one aspect which was clearly about basic business management, and it really helped us in a very difficult environment. Customer, supplier, government, industry, engaging with all of these stakeholders right through the pandemic. We were very close, and I think it worked. I was afraid actually whether this would work in this kind of environment where we cannot meet the customers or the suppliers, or even certain advocacy measures in the industry bodies. But I must say that the whole country itself has learned how to operate. It's not just BASF. It's about the environment that we are in. The whole country has done, and we've also been part of it. And I must say that many of the customers, my peers, when they talk to me, they tell us that they also did not expect it to work as well. Some of the technologies that we are using at this point in time, especially to provide technical services to high-tech industries, whether it is catalysts, whether it is in the field of automotive, it's all state of the art, and I must say that it's something which going forward post-COVID also it is something which we're going to continue. And lastly, about my team and my people, I mean, couldn't have been done by Naren and me sitting in the office over here. It's been done by our 1,000-odd colleagues who are out there in the field, and we've learned a few things. So one of the basics is about how will the workplace of the future look at BASF. So I think with the ongoing discussions, there will be some investments required. There will be some changes required. And I think the policy framework also from a government perspective changes in the context. And that's what we talk about future of work at BASF, as to what will our offices look like. And it's not the aesthetics of the look, but it's about the functionality, about the flexibility of workplace. There are colleagues, historically who've been traveling 3 to 4 hours a day to work and back. I mean, is this really required on a regular basis? So all these things are open for questions, and we are going to invest into technology which makes it smoother for people to work, for people to collaborate. And the workplace per se, I would like to put it, is going to be a place where you come when you need to collaborate with your team members. If it's not necessary, then you don't need to come to work. So it's going to be a hybrid model of physically engaging at a workplace as well as being out there in the market or customers. So a mixed bag. In terms of talent development, I think that was one aspect where we could not do enough in the context of the COVID and related measures. So I think the development of our people, it was not that we tried to save costs on it, but simply it was not possible to send them to a lot of programs, because that environment also takes time to develop. And I'm sure that in the days to go, there will be further development of talent. Because if you remember what I said last year, at the end of the day, you have to make businesses profitable. You need to invest in your business, but you also need the next generation of people who will continue to run these businesses after the people sitting in these rooms have retired probably. So that's what we are working on as well. And last but not the least, I would say diversity and inclusion. It's a core element of BSF strategy. We are committed to increasing our diversity ratios. Currently, we are around 10-11% in terms of gender diversity, and BSF as a group has taken a target that we would reach about 30% in terms of our leadership and our management positions by the year 2030. So several steps in the context of gender diversity as well. We firmly believe as a company and myself as an individual that a diverse group has a better decision making and runs a better business. So I'm confident about that, and that's something which we will invest in going forward. So these are some of the takeaways for me, that it's been a good 9 months. The first quarter was difficult. The second, we bounced back, and the third quarter was really excellent. So in that context, what did we do? We ran our business in a very efficient manner. We did it with a good team, a teamwork, and we engaged a lot with our stakeholders, whether it's customers, suppliers, or government. So that's in a nutshell what we did in the last 9 months, and I'm open to any questions that you might have. Thank you.
Yeah. Thanks, Mohan and Naren, for your excellent presentation. I will now call out the names of the registered speakers and invite them one by one. I request you to be brief so that others are also having an opportunity to ask questions. With this, the first speaker is Mr. Chandraprakash Padiyar from Tata Mutual Fund.
Hello.
Hello.
Yeah, am I audible now?
Yes, Mr.
Yeah.
Padiyar.
Yeah, thank you so much. Good afternoon, sir. And I want to start with complimenting you first in terms of an amazing performance to you and your team. I think the last time we met you, or when you had joined, we had a physical meeting actually, and I remember you saying that you will work towards profitable growth. So I'm very happy to. So in a sense, very happy shareholders actually in seeing such a large or extremely strong performance from BSF. I had 2-3 questions today. The first is in the August meeting, you had highlighted of your initial phase 1 target to achieve 10% ROC. If in year 1 itself, in a matter of 2 quarters, you're now beating that ROC target handsomely actually. So would you want to share your sustainable ROC targets now that you've comfortably beaten that 10% ROC thought? So that's the first point. The second is on the agri business. From whatever I've been following the company, my understanding is that your pipeline for new launches for FY22 and FY23 is likely to be pretty strong. Could you share some insights into that in terms of if you have any 9(3) launches as well? And lastly, on the chemicals business, which is the trading part, given that the business model changed, I was under the impression that the sustainable margins are at 2% kind of numbers on the trading business, but it seems I don't know if has anti-China sentiment or has something changed in the business environment where you're delivering almost double the margins than what I was assuming. So could you kind of guide us on these 3 points? Thank you.
Yeah, thank you, sir. So maybe I take them one by one. On the first aspect on ROCE, I mean, BSF Group has very much set out a 10% ROCE target. That's exactly what I told you last year. And I also told you last year that I would not give you a forward-looking target, like I said on slide number 1. But the fact is that it's something that I constantly and my team constantly endeavors to make sure that we generate sufficient returns. There is some amount of cyclicality, so that answers probably the third question as well. When it comes to the chemicals business, there is certain amount of cyclicality and what happens with especially oil and petrochemical prices. So in that context, there is a time lag, especially in the merchandise business. So we did gain to some extent because of the time lag, because our pricing has been more proactive, whereas our purchases with what Naren mentioned about 6 to 8 weeks of time lag. So we have benefited, which also has had a positive influence on our margins, especially on the chemical sector. And lastly, on the agro front, you're right, we do have certain products in the pipeline for launches. And maybe we can address it offline, or I can give you the specifics because I don't have it exactly how many products in which financial year. But clearly, we do have a couple of products in every year which are new and which are in the launch phase. Is that fine?
Yeah. The second speaker is Mr. Bharat Sheth from Quest Investment Advisors.
Hello. Sir,
Hello. Yes, Mr. Sheth.
At outset, let me congratulate for the good performance in the really challenging time, and thanks for the organizing the analyst meet also. So coming to our business, as you said that largely this last 2 quarter performance was led by nutrition and care business because of some tailwind. So if and profit was much more bigger, swing was there in the profit line. So if I have to really look at a sustainable business in this nutrient care, so what kind of a sustainable business one can really look? And second, sir, we have reported around in Q 9.5% EBITDA margin. So what kind of a sustainable margin that one really look for? And third, whatever we have several business, so underlying all the business, which business you think that we can grow much faster, and what are the underlying growth industry that we cater is really growing?
Thank you, sir. I try to answer to the best extent possible without going against the SEBI guidelines into forward-looking statements. So first of all, I would say that the nutrition and care business, when I talked about tailwind, it's about also the consumer habits. I think prior to COVID, we were also not sanitizing our hands or washing our hands as often as we did in the last 9 months. Now the question is, will this behavior sustain also going forward? If it will sustain going forward, then the business will also sustain at these rates going forward. It depends upon the population's behavior. And I think what has happened with the COVID situation is all of us have become a lot more conscious, and we have started consuming products, whether it is in the area of healthcare, whether it's in the area of nutrition. We focused on that a little bit more as individuals and consumers, and that has led to a positive demand situation which we've been able to cater to with our products. So subject to the fact that the consumer behavior continues even post-COVID, that we like to live a clean and healthy life, the likelihood that nutrition and care business continues to perform well is fairly high. And my expectation is also that that we as a population don't go back to the old habits. So that we whatever good things that we learned as a consequence of the pandemic, we will retain those habits. So that's how I expect the nutrition and care. Now coming to the BASF segments and which underlying industries. First and foremost, I would say let's take the ag industry. So the ag industry, there are two aspects to this. What is the environment around us in the context of water availability, cash availability with farmers, and the monsoon predictions. So this is the underlying factors, and here I hear positive for this year as well. And as a consequence, I would say that ag is poised for a good year in this financial year as well. Now, coming to BASF, I did already say that we do have our portfolio. We are working very closely with our farmers, and we have a couple of new products in the pipeline which will be launched, as was mentioned by the previous speaker. So, in that environment, I think the ag industry holds a reasonable piece for BASF from a growth or an opportunity for growth perspective. Then you are well aware that we are largely exposed to the automotive industry. Now, the automotive industry did not do so well in the last year. However, BASF has outperformed the growth in the automotive industry. And I think when the automotive industry, which roughly contributes 6 to 7% of our GDP, when that develops and grows faster, BASF will also grow with this. And in this, I would say that we would also need to invest in capacities. We did expand our capacity in Dahej for Silasto, so there is some capital requirement as well over there. We might also have to expand capacities in other areas to meet the demand of the growing automotive industry. Some time ago, when you looked at the external forecast, like if you follow JD Power or LMCA, they talked that it will take 4 to 5 years for the automotive industry to recover from the pandemic crisis. Now, if you follow those forecasts, well, it looks challenging. But on the other hand, I'm more optimistic that the automotive industry will do well. The government, with its new policies also in the budget, you saw the scrappage policy coming in. There are certain PLI schemes being talked about for the automotive industry. So these are all positive environments which should also have a positive impact on the BASF business. And last but not the least, overall chemical industry, whether it is for the ag intermediates, whether it is for the pharma intermediates, where BASF has a reasonable amount of products which go into these businesses. There also, I see the government pretty active in the context of Atmanirbhar Bharat to get more manufacturing in the country. So these kind of measures which are external to BASF should have a positive impact on the industry as well as BASF. So overall, I would say with our portfolio, we are diversified across various industries, and whatever happens in the context of own manufactured goods in the country, and I'm not talking BASF, I'm talking about the industry as such. Higher the manufacturing of industrial goods in the country should have a positive impact on many of our segments.
So, sir, I mean, sustainable margin. Sorry, I mean, give some kind of color on sustainable profitability.
That would be a forward-looking statement, sir. My colleagues would not allow me to give you a projection on forward-looking margins. I'm sorry, sir.
I mean, sir, I mean, number or this what we achieved in Q3. So, in view of, I mean, certain headwinds in the aroma input cost, as well as some of the saving which we discretionary spend cutting down. So, how, I mean, one can really, I mean, look, I mean, whether somewhere, I mean, nearby or some kind of, rather than without some color on that. And second thing, are we really, when you are talking of, sir, I mean, manufacturing, so we have a large portfolio for trading, I also. So how do we investment we are making to become a more, I mean, manufacturing within BASF India?
So on the second question regarding the manufacturing, this is a constant exercise at BASF where we are reviewing at our options where we have critical mass to invest in. Like I said, we just expanded or doubled our capacity for Celasto products, which goes into automotive. We are currently doubling our capacity for dispersions, which I actually talked about the last time as well. But due to COVID, there was a slight delay for a few months because we had to stop the construction activity for about 6 months or so. But we have restarted that activity, and we will be doubling our dispersions capacity at Dahej. We are also evaluating various other options for our product lines in the material segment. So it's a constant process at BASF. So we look at the market development, our opportunities, and invest as and when required. And I'm very confident that in the months and years to come, there would be with the growth in the Indian industry, that there would be need to review our capex plans. So it's an ongoing process within BSF. And I really apologize, sir. I cannot tell you what will be the forward-looking margins.
Sir, I understand. Okay, okay. Thank you. Thanks a lot.
Thank you.
Yeah. Reshma Banda from Bajaj Alliance.
Hi, I wanted to understand a little bit more on your capacity utilizations. What would be the utilizations across your different plants as well as for the different segments? And if you could also throw some light on what are the capex plans for the next couple of years.
Naren, maybe I pass this question on to you.
Yeah. Madam, capacity for 9 months is around 60 to 65%. That includes the first quarter where we had almost 20% kind of capacity utilization across. And you have to remember, we have multiple plants. Even Dahej itself has 9 different plants. So it's a combination of everything put together, and we arrive at a number. So that's around 65%. At the same time, if you take only the last 3 months, which is October, November, December, we had around 85 to 90% kind of capacity utilization. And I mean, usually the question again comes up for Dahej also. What was it for Dahej? Dahej also kind of trended at the same rate. For full 9 months, it was 60-65%. And in the last quarter, it was really good with around 80-85% kind of capacity utilization.
So can we assume that the company is operating at optimum utilizations at the end of the third quarter?
Optimum utilization would be nearer to 100%, right? So if there is demand, we are ready to supply that. So for the last 2 years, we have been preparing ourselves from all different angles to ensure when the demand comes in, we will be able to serve. So now when I say 80 to 85% capacity utilization, which means theoretically another 8-10% is still available to meet the demand. And then when there is a capex required, BASF will not shy to invest more, what Mohan said. And when it comes to OMP and merchandise, we don't see so much of difference between the two. We manufacture all the products all over the globe, and whatever the customer needs, we are able to supply to them either from our own facility or from other facilities across the globe. When the trend is upwards, it always looks nice. Why don't we have more manufacturing plants? But if there's a lower demand, imagine landing up with such big fixed cost. Whereas we have the luxury of just importing it in 6 weeks' time, supplying it to a customer and earning our margin. So that also helps.
Sure. And you mentioned 100% is the, it's the nameplate capacity utilization that is possible. But is it possible to do that kind of utilization on a sustainable basis?
Sustainable basis, yes. I mean, but whatever we talk about capacity utilization is after considering all the downtimes and the maintenance and other things. Yeah, this is the capacity that we can run, and 100% is what we can do. There are good cases of dispersion plant which is working more than 100%. I mean, they are depending on the product portfolio mix, what they can manufacture. If they identify some specific products, they can actually cross 100% sometimes.
Sure. And moving on to the second part of my question, if you could outline what is the capacity and the capex expansion that you envisage over the coming 2 years?
Mohan, you want to take that? On the capacity,
Yes,
not on the capacity, on the capex.
Yeah, thanks, Naren. In terms of capex, what I already said is the dispersions plant where we are expanding currently. So that is the capex that we are undergoing. There are several other measures where we have operational excellence measures where with small capex we are debottlenecking capacity. So it's not major capex in that situation. That said, we are also looking at very closely how the automotive industry is behaving and how the recovery is happening in the automotive industry, because that also will be a driver for us in the context of future investments and capex. So at the moment, this is all that we have. So it's not a very heavy capex cycle at this point in time. It's just the dispersions plant which we are expanding.
Sure. Thank you so much.
Yeah. Mr. Vijay Karpe from Bryanston Investments.
Am I audible?
Yeah. Yes.
Yeah, thank you for giving me this opportunity. So as you said that the 9 monthly performance was led by strong volumes and better pricing. So and there has been some inventory gains as well. Can you quantify what these inventory gains have been?
That's very difficult to do, sir, with so many products. So to give you an exact number, and the fact is that we have an ongoing process in this, and there is an element of inventory gain at this point in time. How much it is, I don't have an exact number for you.
It is not significant enough to change the number at a macro level. So it's not all inventory gain that is coming there. Though we always value inventory at the quarter end and book the latest value, it's not all inventory gain. It is the margins and higher volumes, absolute margins that has built it up. To add to what Mohan said.
Okay. Great. And we talked about the capacity utilization for 9 months and the Q3 quarter as well. So how has been the Q4 quarter going? What has been the capacity utilization in the first 2 months, January, February?
We don't talk about that. I mean, that's a running quarter. Only after the March results are announced, we can talk about that. It's not in public domain actually. So we would prefer not to talk about that, please.
Okay. And what are the levers to improve the margins?
Like I said last time as well, margin is differential between what prices we get in the market versus what we buy at as our cost for sourcing our traded goods as well as our raw materials. That's the classical margin, and there is some element of operational efficiencies that we bring in with higher yields and so on. So, I mean, it's not rocket science. It's principally buying better, timing it right, and selling it at a reasonable price.
Got it. And when is the polymer dispersion expansion expected to be completed? And how much will it add to revenues at full capacity utilization?
So we're principally doubling our capacity for dispersions at Dahej, and it will come into play. It was originally supposed to come end of this year, but because of the delay with COVID, it will be sometime in the year 2022. Let's say in the middle of 2022 that we expect it to come on stream. What revenue it will add is a function of oil price. So I'll have to now start looking at oil price, and I think what is more important is whether we will be able to load it fast enough. And I'm pretty confident that we will be able to load it at high levels. So the top line in terms of volume growth will happen as soon as we start up the plant. And if we continue with our margin, you can look at what we've done in that segment of dispersions over the last couple of quarters. And maybe that gives you an idea of what we've worked in terms of margins.
Great. And my last question pertains to the new product contribution. So the products which have been launched in the past 3 years, how much do these contribute to the revenues, percentage wise?
Naren, do you have that exact number?
I mean, there are various products, so kind of segment on segment basis, it's around 5 to 15% is what I can say. There are 12 business units, and across the business unit, there are multiple products which are newly introduced and variants of what already exists. So 5 to 15% is the answer for that, but it varies from segment to segment, as you can imagine. And within the segment, we have business units. So that's the roundabout number.
Thank you. That's all from my side.
Thank you.
Yeah, the next speaker is This is Radhika Ravishekar from General Insurance.
Sir, first of all, let me congratulate BASF India for the lovely performance for the 9th month. I think finance cost control also has helped a lot. Like you reduce the borrowings on account of repayment of commercial papers and all that. You also mentioned you have external some commercial borrowings of 140 crores, which you will be bringing it down now further. Hello?
Yes, yeah, we heard you, ma'am. Yes, that is the intention. With the cash flow that we are generating, the intention is to pay that external commercial borrowing of 140 crores. It's actually 17 million, 17 million euros. And we want to repay that. That is the next outstanding loan we have.
So that will further improve your performance, your profit before
correct.
PBI. Yeah.
Yes, interest to that extent will go down. Yes, correct. You're right, ma'am.
And there is also something that which you have asked the shareholders for voting, that you will have to, among your group companies, you will be limiting, or where your directors are interested, some loans or something you generally give them, so that you will be limiting to a certain extent.
Yes, these are called intercorporate deposits, where between the group companies we lend, whoever has excess cash will lend it to somebody who needs the cash. It's kind of a win-win situation where we also get, we in the sense BASF India Limited, if we are lending out, we get the best price in the market, and the receiving company also gets it lower than what they would have got it from a bank. So we, instead of paying to the bank, I know there are some people from the bank here in this call, so instead of paying to the bank, we try to keep it within the group. So, and it's at arm's length. It's kind of very strictly controlled from our side. Arm's length, whatever is the market best for both the parties. That is the one we have come out with for the voting.
So nothing else. I think also all the others, what I wanted to ask about was capital utilization and all those things. I think that has been answered. I think that is the only query from my side.
Thank you, ma'am.
Thank you.
Thank you.
Yeah, the next speaker is Mrs. Ashwini Manwadkar from New India Assurance.
Hello.
Yes, ma'am.
So there was one news that with the Adani, you are going to put a chemical complex at Mundra. So I just wanted to know, is it happening?
Yeah, thanks for that question, ma'am. So first of all, the proposed investment with Adani, is clarified before, was not part of this company. It was not supposed to be part of BASF India Limited. It was supposed to be 100% investment by BASF along with the 4 partners. However, in Q4 of last year, 2 of our partners backed out of the project. And as a consequence, the BASF also had to put the project on hold. Currently, the project is on hold.
There is some background noise. Somebody has to mute themselves. There is some noise I can hear.
Have I answered your question? Yeah, Pradeep, I think I've answered her question that the project is on hold.
Yes, ma'am. You have any further question?
No, sir.
Okay, thank you. Yeah, now I move to those participants who raised hands. The first one is Mr. Rohit Nagraj. Rohit?
Am I audible, sir?
Yes.
Yeah, good afternoon, Pradeep sir and Mohan sir, and thanks for the opportunity. Again, congrats for a good set of numbers, right from slightly muted in Q1 to Q3. The first question is in terms of the ag strategy that our parent has specified in the last couple of days. So there has been a serious effort from the parent in terms of R&D as well as new products which will come in this particular decade. So how BASF India is likely to benefit from this particular move from our parent? I mean, you have specified that we have certain products in the pipeline, but beyond that, on a longer term horizon, what will be the probably benefit from our parent to BASF India? Thank you.
Thank you, sir. I think the BSF R&D portfolio is again a portfolio which is quite diverse, and there are multiple areas, whether it's in the area of crop protection, whether it's in the area of battery materials, whether it's or automotive. We are doing a fair amount of research and development in those areas, and to some extent, the company will benefit from new products that comes out of its research and innovation. Now, whether it comes through own manufactured products in the country or via merchandise, that depends upon the kind of products, where they will be manufactured, where it's best to manufacture. So all these we will have to evaluate in due course of time. And last but not the least, it's about criticality, the scale. I mean, what we do research, we do it for the global markets, and then obviously India as a market will also benefit to some extent. So that's the way I would put it. Exactly to say which product today would be a little bit far-fetched, and what will come into BSF India, it's a bit far-fetched. But I would clearly say that innovation is the lifeline and blood of BSF, and that's how we survive, and that's how we grow profitably. So very clearly, our CEO Martin Brudermuller has elaborated it, and there are some key areas that we are focused on, and I'm very confident that it will also help BSF India Limited, our portfolio and our business in the long run.
Right. Thanks for the answer. So the second question is in terms of the last 9 months, have we seen any kind of toll manufacturing opportunity from our parents or the sister concerns in nearby geographies? And is there any kind of such shift which is happening, because we've been hearing the China plus one, all across the board? So have we seen some kind of elements of this as far as BSF India is concerned? Thank you.
So there are two aspects to this. One aspect is what happens to the industry overall, the chemical industry, because BSF is a supplier of materials to not only our downstream industries, but also the chemical industry. We provide a lot of intermediates. So in the context of China plus one, and Atmanirbhar Bharat, and what the government is doing, PLI scheme and so on, which is supporting the manufacturing industry in the country. These are opening up certain windows for a company like BASF to supply these companies with intermediates or raw materials or building blocks from our global footprint. The second aspect is it also opens up certain opportunities for investments, which we evaluate from time to time as to when do we have a critical mass that makes it prudent for us to invest into our own capacities in the country. So that's a two-step process. One where we are supporting our downstream chemical industry, and secondly where we ourselves invest into the industry. So it's an ongoing process. Overall, my view on this is the next few years are positive for the chemical industry because the manufacturing industry push that the government is giving will have a positive for the chemical industry, and I look forward to what comes out of there. It's difficult to quantify what and when it happens, because what we saw so far in the China plus one is idle capacities. People who already have capacities which were there, they have capitalized on it. But a capex cycle within our kind of industry, and especially the upstream industries, it's a little bit longer time. You need certain time for this, and I think you will see the impact of these in coming years across the chemical industry as well as the manufacturing industry.
Yeah, so just last clarification. So we have seen the margin improvement, which is on account of a lot of other factors, including the cost optimization. So is it that most part of the cost optimization is now built in our margins? Thank you.
So I would say that we did cost optimizations and certain fixed cost elimination during the course of the last year. Was it all in the full for the full year? Then probably not. So you will see some, because there are certain elements which we only exercise probably in Q3 or Q4, and this would have probably a positive impact also onto the next quarters. So the full year effect will take place probably in the next financial year.
Yeah. Yeah. Thanks a lot, sir, and best of luck.
Thank you.
Yeah. Yeah. The next one is Mr. Amar Moria.
Yeah, hi, sir. Sir, thanks a lot for the opportunity. My first question is, sir, on the material business. Am I audible, sir?
Yes.
Yes.
Very well. So, yeah. So, first question is on the material business, sir. Sir, in material business, you had indicated that there is an element of the Solvay's consolidation also. So, firstly, if you can quantify what was the Solvay's contribution into the material business. Secondly, in the material business had seen a significant improvement in the margin. Out of this margin, what is the kind of margin which is like, a one-off kind of the margin because of the raw material benefit and all, which will not sustain going forward? If you can give the number for that. And secondly, inside dispersion business, post the, what is the capacity expansion we are doing? Like, as you said, we are doubling the capacity. So post doubling, what would be the capacity now?
Thank you. Thank you, sir. So firstly, on the Solvay business, I think Naren presented a slide which showed the revenue for the first 9 months into 3 quarters as well as the results. So that is available in the slides directly. So that you can take it directly from the slide that was shown on BPIPL, which is exactly the Solvay business 1-to-1. So it's also published in our quarterly results for the last 3 quarters. So it's available. The full P&L and balance sheet for BPIPL is available in the December quarter publications. Now, with regards to the material business, the growth that happened to a large extent was on the margin front, and the volumes were not really that much higher than previous quarter. I mean, previous year, if you take the 9 months. So a lot of work which was done was in the context of margin improvement and productivity improvement rather than volume growth, because a large underlying industry for the material segment is the automotive and appliance industry, which was not so strong. So in terms of volume growth, there was very limited. It was higher on margins. Now, your question on sustaining these margins.
I'm asking for third quarter, not for 9 months. So in third quarter, the auto industry is reported, robust growth.
And Naren, do you have the number for the October-December quarter?
Yeah. So,
sorry,
you are talking about BPIPL, right? The subsidiary.
The materials. No, the material segment. The BPIPL.
Material segment, third quarter. No, basically my question is, in the material business, in the third quarter, what will be your volume growth and what is the realization growth?
I don't have it readily available. I can get back to you before we end the call here today. The materials business, third quarter.
Yeah, so we come back to you, sir.
And secondly, sir, last from my side, sir, if you can share the hedge contribution to the overall revenue in this year, 9 months.
Yeah, sorry, we can't give it at a plant level. We have multiple plants, and we don't publish the plant level sales, please.
Okay. Okay. Sir, just the total cost control measures which the company has undertaken during last 12, 18, 24 months. Can you just elaborate what kind of the cost control measures are taken and what cost savings you have realized because of that?
So Naren, the cost control, I don't know if you got it correct. I think the question was what kind of cost control measures? So you had some measures which you had outlined, and what is the annual cost savings out of it?
Yes.
I had
Yes.
shown some examples there of office consolidation, for example, IT network optimization, manufacturing cost
Yeah.
reduction. Yeah, there were a couple of items that were mentioned, and there are some bigger items, smaller items, all that put together. We have around 15 to 18 crores of savings coming out of that. So it has no other operational efficiencies, nothing to do with variable cost. It is purely fixed cost, which we have controlled during that period.
Did 15 crores to 18 crores is for the quarter or for the 9 months?
9 months. 9 months. For the entire 9 months, yeah, that is what we have done.
Sure, sir. I will wait for your details on the material business volume and realization.
Yeah, the material business revenue was up by 35% in the December quarter. So quarter on quarter, it was up by 35%.
Yeah, that I know. I'm saying
and out of that, around 30%. I mean, the majority of that is volume increase.
I see. Great. Okay, because I thought the price, because you mentioned in the opening presentation that there's a significant increase on prices as well. So basically, that's the reason I asked, because a lot of prices have moved up on the commodity front as well. But you are saying you have witnessed
majority of that is volume, correct? Yes, sir. Majority of that is volume.
I see. Great, sir. Thank you.
Thank you.
Yeah. Mahantesh, yes, Mahantesh.
Thank you very much. I hope I'm audible.
Yes.
So my question is on the 9-month EBITDA performance. Can you give the breakup of the build-up that you showed in the form of a waterfall chart, the breakup in value and the underlying volume growth? So that's my question for you.
So we don't give the volume growth at individual segment level. It's only the revenue and EBIT before special item what we show here. That's the public available information which we show and explain here.
I'm not expecting a segmental volume growth, but what is the general underlying volume growth that you have achieved for the 9-month period?
Yeah, that I can answer. Approximately 17 to 18% growth. 17% growth. So coming out of volume growth. If you are asking for 9 months.
9 month over 9 month, right?
Yes.
That's
yes,
how
correct,
I should interpret it.
Correct.
And so therefore the balance would be attributable to pricing and cost control measures.
There is a plus and minus across the segment, across the business. There is plus and minus. So if you have seen the total overall growth, it's around 17-18%. Yeah, whether you take consolidated or standalone, and thereof mainly it is coming from volume growth.
So when we move into the next year, I understand that you will not give a forward guidance, but just for a logical extension of this volume growth, you will have your new plant of dispersions coming up sometime mid-year next year, and you will also have better capacity utilizations of the current set of products, and you also have the effect of the consolidation of the polyamide subsidiary. So logically, should we therefore assume that from when you move from FY21 to FY22, we should see better volume growth as a whole?
Maybe I take that, Naren. So firstly, the dispersions plant expansion, like I said, will only happen by summer of next year. So that will not affect the next financial year also. It will be in the years after that. When it comes to BPIPL, you have the numbers for the 9 months. And yes, it will be consolidated. So it's now merged into BIL. So that much you will have that impact on BIL in the next financial year.
Okay, thank you.
And organic growth, your best wishes that we improve capacity utilization, I take it as best wishes.
Fine, sir. I do hope we will see better growth because the underlying economic activity is indeed rising. My second question is, you have laid emphasis on the automobile industry on multiple occasions in your conversation today. So, therefore, the logical question is, are we preparing for some kind of performance chemicals for electric vehicles and batteries to come into to the company's businesses going forward? If yes, can you clarify and elaborate on that?
So at this point of time, there is no activity within BASF India Limited on battery materials or the business of battery materials. But you must have followed our global press conference where our CEO did talk about our activities, and also in the previous quarters about our activities in Finland and Germany in the investment of cathode active materials. So we don't really make the batteries, we only supply the cathode active materials. And how the industry develops within India in terms of battery materials and battery cell manufacture is something that we are observing, and we will look at it in due course whether it makes sense for us to do something in India.
And finally, a very small question. You talked of Salesforce initiatives in your very first slide, if I recollect. And you said it was a new initiative. Can you elaborate on that?
Yeah, Salesforce and Net Promoter Score are two things that we launched to listen to our customers a little bit more, to understand their pain points and improve upon. Salesforce essentially is a CRM tool which has been in the industry for quite a while, and we migrated to that as well. The fact is that we do get pretty good feedback from our customers on their pain points, and it helps us to improve what we call as ease of doing business. Like the country is trying to improve its ease of doing business, BASF is also trying to do the same, because we figure that on feedback from our customers that if there is something which is wrong with BASF, it's our complexity. And how to improve that is something that we are quite passionate about. So these tools are helping us in terms of customer service, feedback from customers to improve our products, to improve our services, our supply chain, and so on. Eventually, our endeavor is that helps us to grow our business.
Will that impose a significant cost burden on the company?
I don't look at it as a cost. I look at it as an investment which helps me grow business. I mean, at the end of the day, if my business doesn't grow profitably, it doesn't make sense and we will scrap it. The whole point is listening to our customers only helps us to grow our business. And with the incremental margins that we are going to generate, I think this will be very accretive to our business.
Thank you, sir. Thank you for patiently answering my questions.
Yeah, thank you.
Thank you. So, Mr. Rahul Jain from Credence Wealth.
Thanks for the opportunity, sir. Am I audible?
Yes.
Sure. Sir, a couple of questions from my side. Firstly, sir, with regards to segments or products, so we have an unlisted BASF in India. So how does this product segregation or segment segregation happen from the parent level? So when we have some new products coming in from the parent side, what are the parameters or what are the ways to decide as to whether it will be taken up by the listed entity or the unlisted entity?
Yeah, so at the moment we have three operational entities outside of BASF India Limited. Two of those entities, one is Nunems, which is an acquisition of the Bayer seeds business, which is held separate worldwide because it's a completely different business to our existing crop protection business. So worldwide, this is a separate company because of different business models, and the same thing happens here as well. Chemetall, which was also an acquisition, which has a completely different business model to our existing coatings business, and also is held separately worldwide. So in India also it's held worldwide. So it's a global strategy to keep these two businesses outside of the BASF entity in every country. principally because of the fact that the business models are completely different and the ERP systems that they use are different, and it doesn't make sense to integrate them with the existing businesses of BASF. The last one which we have is our catalyst business, automotive emission catalyst, which is a joint venture with a third party. And as a consequence, it is not part of our listed entity. All other businesses are run through our flagship company, which is BASF India Limited. So to answer your question,
any new product in the line of activity which listed entity is into, those products should automatically fall into the listed entity. Is that
so this is
how we should
exactly what we did. This is exactly what we did with Solvay when we acquired the company, and that was pretty much in line with what we are doing in the material segment. Hence, we consolidated that company and merged it into BIL. That said, if we now enter into a joint venture, for example, when we announced the possibility of this joint venture with Adani's, that was exactly a business which was outside the scope, so it came out of BIL and it became 100% investment by BASF, potential investment by BASF SC with Adani. So if it's not a joint venture, if it's not something which is globally held separate, we try to bring it into the listed entity.
Sure. And sir, with regards to our focus, what is the top management focus with regards to which top two businesses you are focusing on out of the various divisions which we have? For next 3 years, where do you see much more higher traction, and thereby our focus lies on those businesses?
Now, this is a bit complicated to answer, but principally I would say that what we've discussed so far, the outlook or the economic outlook, and we said that the ag business, the automotive business, these are businesses doing well, and if our consumption habits stay the same, healthcare, nutrition, care chemicals, these are businesses in our segments which offers a fairly good environment for growth, and obviously we also focus on that in terms of industry. But that said, we also are suppliers of chemicals to the wider chemical industry. So, I mean, we focus on that as well. So with BASF, with its diverse portfolio, it's very difficult to pick and choose one over the other. And it depends upon what happens in the overall manufacturing setup within the country. And here, as the industries grow, we will continue to align our strategies for growth with it.
Sure. So thereby, one of the questions aligned to this is, we have a decent proportion of trading business within our overall company or overall top line. So as mentioned in the presentation, the chemical business is purely a merchandise business. So in the overall top line of the company, what percentage today is a trading business, and thereby what is the manufacturing? And going ahead in next 3 years, will this proportion remain similar, or will this proportion be skewed towards more of manufacturing?
So Naren, you take that question, proportions?
Yeah. So going by the current 9 months situation, we have around 40% own manufactured production and around 60% is merchandise. So to some extent, when the dispersion line comes active, you will have a little higher OMP there, the 45 KT that they are going to manufacture. But otherwise, it's the trend that develops in the market. I think Mohan can answer that. How the equation between OMP and merchandise, which is 40-60 today, is likely to develop. It depends on what material is getting the demand, what products are getting the demand.
Yeah, thanks, Naren. Maybe I continue with that and just add that when we add capacities, these are step increases. And what we do typically is we do some pre-marketing based on imported goods, and so it's not like a linear expansion, or it doesn't move 1%, 2%. When we invest into some facility, you will see a step change. So typically, you will see the OMP share reducing as we import more goods, and then if we invest into one or the other, you will see a step change where it bounces back. But I think having a fair split where we are today, I mean, give or take a few percentage points from the halfway mark is not too bad to have, because that balances our portfolio and also gives us opportunities to do business and economies of scale in the country as well as for our global assets.
Sure. Is it possible to share the margin differences between the trading businesses and the manufacturing businesses? Just some kind of range which could be helpful?
I don't think we publish those numbers, firstly, and secondly, these numbers change quarter to quarter. It's not a fixed margin for ONP or a fixed margin for merchandise. It depends on how the volatility in the markets, what's the time lag between buying and selling. So there are a number of factors involved over there. So there is no fixed margin that I can tell you that this would be ONP and this would be merchandise.
Sure. Thank you.
Yeah. Mr. Bharat Sheth. Yeah, we can hear you. Yeah.
Just on, since we have a large part of the business is merchandise and which is mostly imported material. So what is our risk management, or strategy for currency related risk management strategy?
Naren?
So we hedge all our exposures, whatever is the outstanding, the net exposure we always hedge, and there is no much scope also for us to bet on any currency movement. Yeah? It's always hedged, and so what is the impact on you, if that is the question you are asking.
Yeah, but so typically it adds how much cost on this merchandise hedging cost? Hello.
Sorry, was that a question? I'm not able to hear properly.
Yeah, so
Can you
how
repeat?
much really add to the cost of merchandising, to hedging cost as a percentage of revenue?
Yeah, I think I heard you. If not, you can tell me. It's a kind of 4-5% per annum forward premium. If you're asking about the coverage cost, right? The hedging cost.
Yeah. But
Yeah, it's 4 to 5% per annum.
And
And
as a
it doesn't.
percentage of as a percentage of revenue, how much it works out? Hello?
Percentage of net sales.
Yeah.
So that I don't know how you calculate percentage, because this whatever cost I talked about is the per annum cost, right? I mean, the exposure is not per annum. Exposure keeps changing. Yeah, every time you import and you pay for that imports in the 60 or 90 days time, your exposure goes away. So only for that pro rata, the 5% per annum cost you take.
Okay, thank you very much, sir.
Yeah.
Thank you. That's all.
Thanks.
Roy Sinha from MK Global.
Yeah, am I audible, sir?
Yes.
Yeah, thank you for taking my question. So just a follow up from one of the participants only. In the material segment, I mean, we have been seeing EBIT performance on the negative side for almost 8-9 quarters, and this quarter we have seen a strong margin improvement there. So how much is we can say is because of improvement in the business dynamics, and how this much is impacted from the crude oil movement also, because right now obviously it's annual crude oil is at 1 year high, and our others lot of other segments have been also being benefited or impacted because of this crude oil movement. So how we should basically see going forward the margins in context of the crude oil movement?
Thanks for that question. So I will not now talk about future margins, but what I can say is a large part of the margin improvement is something which will stay, and I expect it because it's a function of our pricing agility as well. So we intend to keep our pricing agility, Now, of course, in black swan events, if suddenly the market collapses and you had that one crazy day last year where crude oil went into negative territory, WTI, which was only for a day. If things like that happen, okay, it's beyond our control. But under normal operating circumstances, I would expect that we retain the margins intensity over a cycle.
Okay, okay. And sir, would it be possible to just give a ballpark number on the kind of exposure we have on auto or pharma or a few major segments? I mean, for agri, obviously, we have a segment dedicated towards that. But for other segments, we have a lot of, I mean, exposure towards auto and different segments. So just a ballpark number, if at all we can get from your side, that how much is overall, our exposure would be on the auto side and pharma.
So pharma, I don't have an exact number on the top of my head, but I would say in the auto sector, it would be in the order of magnitude of 20%.
Okay, okay, that's helpful. That's helpful. And sir, in Celasto business, we have expanded the capacity right now. What would be the utilization level there? And are we also looking to expand this our PU business as well?
I mean, we recently started up the Celasto capacity. So, I mean, we do have spare space there to grow in the next couple of years. Then regarding the PU or the engineering plastics, I will add that as well. I'll throw that into the discussion because they are related businesses. And these are under evaluation. At this point of time, there has been no decision taken as to what to do. But we are evaluating at this point of time as to what should be our next steps to meet the growing demand that we expect from the automotive, appliances, and construction industries.
Okay. Okay. And the last question on the agri side, as we have also indicated that there is a lot of product in the pipeline for next 2 years. So in last 2-3 years, we have added new crops actually in our portfolio, and we have diversified from soybean based main products to different corn and rice, etc. So is there any new crop we are targeting right now, or would be added in in the coming year?
Well, there is ongoing work going on there. I mean, we are also diversifying into high cash crops, fruits and vegetables, and so on. So there are products which are going and we're also trying to expand our portfolio for rice and more suited to the Indian market. So this is an ongoing process. And also, if you look at BASF globally and our published numbers, you will see a significant portion of our R&D investment goes into the ag side. That's where I'm pretty hopeful that in the next years, and someone asked that before about our pipeline, that our robust pipeline continues to earn our business a good growth story.
Okay, okay. That's all from my side, sir.
Now the last speaker, Mr.
Hello.
Hello. Yeah. Am I audible?
Yes.
Yeah. I'm Rohan Adwan from Multi-Act. Sir, like you spoke about the materials segment, could you talk about the nutrition and care segment? Their margins have sustained for 2 quarters. Q2 was good and Q3 was even better. And even in that segment in the past, we've had, losses. So what has changed, sir? Is this pricing that is better? Our competitive intensity, has reduced, or we've reached critical mass, and so the operating expenses, the fixed costs are now lesser as a percentage of revenue. So if you could talk about nutrition and care. Thanks so much.
So nutrition and care is a mixed bag. There are a number of things that we've worked on. We've worked on our portfolio of products within that segment, and we have worked on our pricing. We've improved our utilization rates. So it's been a combination. It's not been one silver bullet which has made that happen. It's been a combination of all these factors: portfolio, margins, volumes, utilization. So mixed bag of everything.
Okay. Sir, so what I hear from you, whether it be nutrition and care or be it materials, a lot of margin expansion has to do with what you've done internally versus, some external circumstances like crude oil or, inventory gains helping it, on a one-off basis. Would that be a fair summary of, margins for the last 2 quarters?
So I wouldn't take 100% of the credit, but I would say probably about 70% is what work me and my team have done. And probably about 25 to 30%, there have been a lot of factors coming in, like not inventory gain, but basically pricing. What we do is pricing, but the agility of pricing also is something that we do. But the fact that there is time lag between the time you buy and sell, especially for traded goods, is something which you cannot get away from. And on the flip side, when the market collapses, or let's say crude oil collapses and the chemical market collapses, there will be a flip side. So if I were to say, to be conservative, I would say 70-30. 70% is our efforts. Some 30% also comes from external environment.
Got it, sir. Thanks for the question and all the best.
Yeah. Now the last. Now I request Mohan to answer questions raised via chat. Manohar has handed over those questions to you, Mohan.
So someone has asked a question, given the new, I guess this is BPCL Kochi plant that has been recently started with capacities for acrylic acid, oxo alcohols, etc. Do we see any emerging opportunities given such large feedstock capacities available now and positive, negative impact on our segment? You would know that BASF is also a player in the acrylic acid, oxo alcohols field. And that was exactly what we were also looking at in our potential joint venture with Adani's, knowing fully well that BPCL is investing in a plant in Kochi. In that scenario, there are certain opportunities it's a co-manufacturer, and BASF is active in the petrochemical world with co-manufacturing possibilities. So there are some opportunities there. But that's something which we have not actively engaged as yet, and it's something which we will look at in due course. Second question was, I think we answered this question. Yes. Mr. Amar Maurya, he actually spoke on the
yeah.
Because the others view. So there is one question from Mr. Jayesh Shah. BASF seems an outlier amongst all MNCs based in India, with gross margins now at 19% from lows of 10%, while most MNCs work at 50% gross product margins. Will BASF catch up with the rest, or we can realistically expect gross product margins between 15 to 20% range on sustainable basis? This obviously leaves little room for EBITDA given SGAs at 10%. Your broad thoughts would help here, not asking for any specific guidance. Finally, thanks for the impressive performance in difficult times and an excellent presentation. Regards, Jayesh Shah, OHM Portfolio. Sir, I would say that 50% gross product margins would be difficult for BASF. I don't think that's a portfolio effect, I guess. And whichever MNC you are comparing us to probably has a different portfolio to ours. In our portfolio, we do not have those kind of margins. Again, like you also correctly said, that I should not be giving future guidance on what these margins are going to be. And like I promised last year, what we work on is on profitable growth. Me and my team works on that. We will work on volume growth. We will work on improving our margins overall, and we will work things we will continue to do on a sustainable basis. The external environment is something that I cannot control to a large extent, but we will adapt our strategies and our tactics based on what's happening around us. Regarding SG&As being at 10% or higher or lower, what talked about in terms of resource optimization and cost allocation and focus on fixed costs is exactly that. Now, SG&A also is a function of portfolio. As you grow a business, like for example, if you have a commodity chemicals business versus an ag business, the more you invest into the ag business and grow the ag business, SG&As will rise as a percentage. The more you have on the chemical side, which is, I mean, less intensive in terms of manpower and distribution and so on, you will have lower SG&A. So it's also a function of portfolio. So one has to look at how the businesses grow. In the end, the target for us is to make all of you all happy, our shareholders happy, and that happens with profitable growth. We fully understand that and we are committed to that. Thank you, sir. I hope I answered the question. I don't see anything else here. Okay, this is done. Pradeep?
Yeah. With this, we will conclude our investors meet. Ladies and gentlemen, thank you for your presence here today at our virtual investors meet. I request you to take care and stay safe. I also thank Mohan and Naren and Rajesh for participating in our investors meet today. Thank you all.